Welcome to this episode number 67 of your next trade called today, end of the month, bang. So what happened on Friday is we went from being 1% negative on the day on the S&P 500 to 1% positive at the end of the session. So starting with looking at the SPY, the chart of the day, as you can see, we went down 1%, then we bounced a bit, and then last 20 minutes we went on a big move. Different explanations to that. First one is, something that I flagged always in the Discord community. This is the end of the month, so you're going to see rebalancing from many funds, between stocks and bonds. But as well, the most important factors for all those moves more recently, we are talking over the last couple of years, has been the activity of the short-dated options. So I took the example here looking at the SPY calls 525, looking at expiry next Monday, this Monday. And as you can see, 20 minutes before the end of the session, here this is the UK time, so from 8 to 9 p.m. UK time, we saw 30 tons of options, call options, both the call 525, the 526, the 527. So you see a lot of activity. And in the meantime, because of this gamma delta projection, you get the underlying, the SPY, the NASDAQ, anything that was stock went up 1% in 20 minutes. So as always, looking at the drivers, we look at, the calendar. Calendar was telling us it was the end of the month, rebalancing, that we could have some funky, funny moves in the last hour of the trading session. And this is what happened. So big bang from 20 minutes before the close. But what about the year-to-date asset performance? So far stocks, doing very well. Up double digit in the US, 10.6% on the S&P, 15% from Japan, 10% for the Euro stocks. For the dollar, so we look at the dollar here, bit of weakening of the euro dollar. So overall dollar pretty strong on the year, 2 to 3% versus most currencies, very strong versus the Japanese yen. We are talking 10%. So that has been one of the drivers for the macro. And as long as the carry between the US and Japan is so detrimental to Japan, a lot of weakness of the Japanese yen can be explained. 60% plus for the cryptos, and then we still gonna have a lot of good performances for the commodities, gold, WTI, copper. So let's look now at the week-to-date asset performance, and this is more interesting because we've seen some weakening this week over the stocks. So stocks were finished roughly down 1%, but they were down 2% on the week. As I said, just 30 minutes before the close. So some weakness in stocks. Overall, should I say the US dollar not moving much, but the interesting one has been the CNH and more interestingly CHF. So looking at the Swissy pretty strong for the week. So this is the one to be watching if you're looking at FX. This is the space really to be monitoring. Overall, if we're talking about crypto, if talking about commodities, kind of flattish, but copper down 4%. Last weekend, we flagged the fact that on Thursday Thursday 10 days ago, we had a reversal, and this reversal has been confirmed. We will be checking that when we look at technical analysis. So what about the week-to-date industry performance? And this is pretty much, the S&P around here. You still see between the winners and the outperformance versus the S&P that there is divergence, that really between losers and winners there is a bit of divergence. So that has been what has been happening for the market over the last couple of weeks, where some of the winners have been struggling. So the recent winners, the ones that were pretty up until the mid-May, have been struggling a bit. We are talking cybersecurity, we are talking software. So software very weak. We have seen the names like Salesforce down 20% on the week. So some spaces that are telling us that there is some weakness. What about the sector's performance? This is really the divergence that we have been talking over the last couple of weeks. So the big winners for the year, which was up 9% so far, has been struggling. So we see some rotation. Don't get me wrong, the Facebook, the Meta of this world, the big weighting of the S&P 500 are still doing very, very well. But inside the technology, for example, you're going to have some big losers. So the concentration into the winners is even worse than before. We are really going into the same names over and over, which, with something that we discussed 6 months ago, 12 months ago, the market breadth of the overall market is pretty bad. But as long as you get those big weightings of this Nvidia, this Apple, this Microsoft, that makes the market going higher. We flagged as well that going into June, one of the biggest stocks to be looking at will be Apple. The reason is we're going to have some drivers for artificial intelligence. So this is really the space for me to be looking in, one of the names that I will be really looking after. What about the rates? 450 on the US 10 years, so pretty much the same for the week, pretty flattish. We are in the trading range between 440 and 460. We flagged last weekend that there was a lot of supply coming this week. So we had two big auctions. I think it was on Tuesday, then another one on Wednesday. So overall, roughly 200 billion plus of supply. Each time that you see supply coming into the market to find the balance between supply and demand will be asking for higher yields. And these higher yields is obviously putting pressure on the bond market. After that, due to the PCE that was perfectly in line with expectations, there was a bit of relief. So we are now at the 450 level. What about the Fed funds expectation? And I always like to be looking at comparing how these Fed fund rates have been since we started the move. So we started a big move from the 1st of May roughly for stocks. And I want to compare what is, the market pricing now for the year for December versus 3 weeks ago, a month ago. It's more or less the same level where the market is expecting the Fed to be cutting rates by 0.25, so one cut for 2024, and then a bit more cut going forward. So a bit more dovish Fed expected. If we look at the VIX, so the VIX closed at 13% and below, but it's not giving you the right picture. We had a bit of jump up in volatility. So yes, we flagged the volatility, the really low implied volatility and realized volatility. We looked at the 10 days SPY realized volatility, which was below 10%. We had a bit of a move up on the volatility, but as always, what happens over the last couple of years is we do have a lot of products mostly coming from Asia, and some products where you're going to be selling volatility each time where you go when the VIX, when implied volatility for the S&P goes around 15%. Okay, so that should be your threshold. Anything that doesn't go above 15%, there is no panic, and then you smash volatility. So I want to go now into technical analysis, and as we just finished the month, I want to go into a chart and using a monthly chart looking at the S&P. So we have been trading in a 300 points range, 5-6% over the last 3 months. So not much of direction. This move that we had on Friday makes this candle for me pretty good. If you look at the Nasdaq, this is more or less the same picture where over the last couple of months we had some volatility, some big changes. We are talking, similar to 5% move, but no clear breakout yet. What about the Russell? Russell is the same, not really giving you any picture, but talking about market breadth, talking about the winners, this Meta of this world, and we are obviously talking about Nvidia, has been pushing the concentration even more into those very few names. So now I think the S&P 500 is made up of these 7 names, roughly are making 32% or 33% of the index. So as long as those names are doing well, and they keep on doing well, we have the markets going higher. Not much color to give you on the crude oil. I'm not trading it that much these days. Nothing to say. This one is really interesting. You see the candle and the rejection where we had a massive rejection from the 520 to the 460. So really 10% lower from the highs. That is not a good candle if you think about technical analysis. This is a big rejection. What about gold? Gold, same. You do have like rejection, so not as strong as silver. Silver is more bullish than gold. Euro dollar, not much of a view. I'm looking into the dollar yen. So dollar yen, which managed to bounce on the 152. I think going long the Japanese yen with the tight stop loss from the recent highs is probably a good one. So I'm thinking, you know, entering this position around 158.50 as a long Japanese yen. DAX, this one, the one that we flagged, pretty much the most easiest one in terms of technical analysis, clear channel. So far we saw rejection from the top of this channel. So let's move into what happened for the week. As always, we look at what we discussed last weekend over the catalyst. We discussed the end of the month. Guess what? End of the month, this is what you had on Friday. So big move. It's like the we had on Wednesday, Thursday, Friday before that, like a VWAP order, like a big selling order, which was mostly from, if you think about it, about rebalancing, because, you know, these stocks were so strong for the month that, you know, the pension funds were selling it from T-5 to the day. You have the selling, and then, you know, last 20 minutes to the last hour, we had this call bang, and the market, we are talking the S&P, went from 5220 to 5300. So big move. We are talking 1.5% in less than an hour. What about the macro, the core PCE? So core PCE, that was on Friday where we had the first move here. So month on month plus 0.25. The headline number is giving you plus 0.2% month on month. So you think, oh, it's brilliant. But the numbers was plus 0.249. So when you do the round number, that gives you plus 0.2%, but that was exactly like the expectations. And as you can see, recently we are still talking a core PCE that is month on month still pretty strong. What I'm interested, as I said, the bond supply, we saw a lot of bond supply, and we saw the impact on the rates. And finally, I'm interested into this one. So if you've been following artificial intelligence, that means probably you have been trading the market over the last year. But there was Dell that went from 120 to 180 and then came back to 135. Why? Because they had their earnings just after the close on Thursday. And the expectations were like, it's going to be artificial intelligence, it's going to be brilliant. And if you listen to the call after the close, there was a question that was asked from Bernstein analyst, more or less saying, guys, you're making 1.7 billion more on selling servers, but if I look at the bottom line, that means the operating margins for your AI servers were effectively at zero. And the answer for the management were like, more or less, you know, it's you have very few winners for the time being on the artificial intelligence space. The big winner is obviously NVIDIA, but interestingly, all the names that were pushed before have been coming down quite a lot from their recent highs. We are talking 30 to 50%. So this is the space, again, to be looking at. Looking forward, what are the catalysts? So we're going to have the PMIs, okay? We're going to have the ISM manufacturing PMIs for the US, for Europe, for China. And on Wednesday, this is services and PMI, but we have seen better numbers from the manufacturing. Services pretty good, at least for the flash PMI. So we are talking same kind of economy, 2 to 3% for the world economy, 1-2% for the US economy. Another big number is obviously going to be this Friday, where we're going to have the NFP. So the labor is going to come with the numbers. More recently, how the S&P has been moving on NFP day, pretty good, you can say. Out of these 1, 2, 3, 4, 5, 6, 7, 8, out of these 9 occurrences, we had the market up 8 times, and we are talking most of the time it's going to be almost 1%. So market has been doing pretty well. One of the factors was more recently that NFPs were a bit below expectations, so the market like it. In terms of pricing, what is the market pricing in terms of move? We are talking plus or minus 1.1%. So volatility implied and realized is pretty much compressed. Other factors, the one that I'll be looking, because I'm trading stocks, so that's going to be for the earnings. We have an interesting one, which is Wednesday after the close. We have Lululemon that get absolutely hammered more recently on expectations of sales coming lower, some change on the management. So as always, as a retail trader, you're probably going to start and say you're going to be paying whatever implied volatility that the options will be paying. But there is an easy way to look if the implied volatility that you're paying makes sense. You compare this implied volatility. There is, how to look at it. You look at at the money straddle, but you compare this implied volatility with the most recent realized volatility. So here, the implied volatility is at 9.8%. So market is expecting for the week the LULU to be moving by roughly 9.8%, plus or minus. More recently, the last 9 earnings, the market LULU has been moving by 9%. So as always, implied volatility is most of the time a bit higher than realized volatility because you pay a premium, the same as you pay a premium for your insurance versus the chances, the odds of your house burning or you having a car accident. We have elections as well today, I think, in Mexico, and we have elections results on Tuesday for India. That is just for emerging market, but this is a space as well to be looking at. So for the week, as I said, ISM manufacturing, PMI services, NFPs, this is for the US. And the big one that I did put here, which should have been here, this is the ECB. We have the ECB on Thursday, the expectations that they'll be cutting on Thursday, and it might be just a one-off. So we're going to be looking at what are the comments going forward. So pretty strong month for the risk on for assets. We are talking stocks with the S&P up more than 5%. So very strong month going forward. We're going to have the Fed in June. We have the ECB, as I said. So a lot is going to be about macro. We have less, obviously, drivers because the earnings season is over. So it's going to be going forward into conferences, what Apple is going to be saying, for example. So this is it for me today. As always, if you get questions, you can send me an email. If you want to join the trading community through the Discord, there is one channel for everyone. If you subscribe to the 4x4 video series, or if you did the mentoring in the past, you can have access to more channels. So again, this is what we offer through the education. I hope this video helped. If you like what you saw today, put a like, put a comment, and otherwise, have a good trading week. Bye-bye.